This month's expert interview, we talked with Lyons, who's the founder of American Institute of Certified Tax Coaches. We really went into a lot of detail about why you want to take year-end tax planning seriously and how it helps businesses. Biggest thing about the importance of tax planning is just the amount of money it'll save you. It's straightforward, there's no problems, but I mean, there's so many tools that we can use before the end of the year, and his analogy was a great one. His analogy was like Cinderella at the ball, at midnight on December 31st. All those tax planning tips that are great turn into the pumpkin and they disappear. I told the story, and it's kind of an important one, of two different taxpayers. One who came to me, dropped their stuff off as normal, had an increase in taxes, in income, which resulted in owing $25,000. They never had owed before. And of course, in their mind, when they picked up the tax return, I'm an idiot. I really don't know what I'm doing. I'm supposed to be saving them taxes. What most people don't understand when they drop off their work at the CPA is quite simply, at that point, there's not much we can do. We have a few things we can do, but it's history. We're recording history. Compare that to another taxpayer who called me up last October and said, "Hey Wayne, I think we're having a pretty good year and I'm going to owe some taxes." So I do a little projection for him, and yeah, he's right. He's going to owe about $90,000 in taxes. So we have a couple of meetings. We come up with a strategy. We project there's some things he can do before the end of the year, because there are thousands of things, pretty close to thousands of things we can do before the end of the year that can cut his taxes. And we tell him he's going to owe about $25,000. Do the tax return, comes in around 28 because it was just an estimate. But think of the way those two meetings went when they picked up their tax return. The first guy's angry, takes his stuff and storms out. The second guy thinks we're geniuses. The truth of the matter is we had time. The first one happened before the end of the year when there was still time to do things. The second one happened after the end of the year when last year is just history. If you do nothing else after watching this interview and reading the future articles and all our tax saving tips, take tax planning seriously, because it's the one thing that, as Ed said in the interview, it's one of the few things in business that's guaranteed. Because you're guaranteed to do one of two things. You're guaranteed to find some way to save taxes. The second thing you're guaranteed is, at bare minimum, you're going to know what you're going to owe months in advance. I mean, I don't know about you, but I hate drama. The idea of dropping off the tax return and having finding out that I owe $25,000 2 days before the deadline really isn't something that I enjoy, as opposed to finding out in November and December that I'm going to owe $25,000 in March, April, or next October if I want to delay it that long. So that's the importances of tax planning. The other thing we went into is who can benefit from it. Well, really, every taxpayer. Because that's something that was stressed in the interview, is that income taxes affects our life from start to finish. I mean, we literally are affected at it by the birth of a child, when they go to preschool, when they go to college, when we go to college, when you get married, when you get divorced, when you start a business, when you close a business, when you die. Even the taxes aren't done then. So you want to do some estate tax planning. And if you're in business, every single transaction has tax consequences. As we said in the interview, you really shouldn't plan a transaction just to save taxes, but you definitely should take it into an account. For example, if you were planning on buying a piece of equipment next year, bringing it this year, you get a good deal maybe because you're buying it in an off time, plus you can save 30–35%. Finally, kind of the last thing we talked about, there's some other things we talked about in there, is that tax planning isn't just for year end. It really should be all year round. And one of the advantages of tax planning that happens when you don't just do it at the end of the year is the idea that you really are starting to learn how the game's played. The tax game is like any other game. If you don't know how it's played, you can't win. So sitting down with a tax preparer when they're not busy, don't forget, that was something else we brought in the interview. When you bring us your stuff in March and April, or we're doing it in September, October for the extensions, as CPAs I can flat out tell you it's the truth. We're thinking about compliance. We're thinking about taking what really happened and sticking it on the return. It's all we're thinking about. Now, from November to December, and then also after April and May, June, July, we're able to be thinking about how to cut your taxes. They're really two different things and shouldn't be confused. And those are some of the key points that you should get from this interview. If you didn't, go back and watch it again. This is definitely one of the more important interviews. Until next month, let's make more money than we ever have in the past. Thanks. Bye.